Every real estate deal is different, and a lot of deals right now, especially right now in 2025, are very difficult. And when you're working with a lender, it's important to have somebody with all the tools in their toolbox. And in this conversation with Brett, we talked about how he solves deals using a bank that he's affiliated with, tools and flexibility when it comes to in-house lending. And I think you'll really be intrigued to find out how Brett's solving problems right now with his team at Whitney Bank. So check out the conversation. Let's talk about the last topic. Let's talk about marketing and relationships and community building, because you're big in the community. I mean, for a while there, you and I were probably seeing each other 5-10 times a week because we were going to all the same marketing events, which is great. And
still
lately,
sometimes do.
Yeah. And I've seen you lately you're right. I think I saw you 3 times last Thursday, 3 different events. Lately, I've seen you're involved in a lot of boards, and I commend you for that. So I know you're doing WCR, you're doing Neighbor, and just being honest. I mean, I do the same groups, and you don't always see direct ROI from those groups. And I want to talk about the mindset. Some people reach out to me and they're like, "How are you involved in so much stuff? How can you afford it? What makes you decide what you're gonna join?" Or I'll hear, "You're everywhere." Well, the reality is, I'm everywhere that my ideal client's going to be. I'm everywhere where the people that I want to do business with will see me, so that they know who I am. And the point that you made a second ago was that I want them to know who I am. So even if they're not the person that refers me, that if they hear me involved in a transaction, that they're okay with me being involved. Have you wrapped your mind around that mindset over the last couple of years?
You had to. Being new in the business, when interest rates started going up, it's a little bit more difficult to obtain that client, right? Gain those relationships. So the only way to gain those relationships is by proving yourself throughout a transaction, right? That's where I've really built the most rapport with my real estate partners, all my referral partners, title, everybody. I show them how I work in a transaction, and that's gotten me the most success and most business repeating back to me and coming back to me. So, I've done that. I've joined all these groups. I'm there. I'm getting to know them, and I'm sponsoring events, talking to them how I conduct my business. Like the story I was just telling y'all about being thorough on the front end. I've said before on this podcast, about 90% of what you do on loan officer, you can solve on the front end. There's always going to be that 10% of the unknowns or just weird these weird situations you'll never know until you've gone through it, right? Yeah. And then, you learn from it and you move on. So, but if you're thorough on the front end, you're all good. So, I talk to those groups, or, I'm sponsoring them and make sure that they're aware of that. And then, they get to know me. They get to know that I'm not I'm not the salesperson, right? I like to say I like to build relationships, because you put me in a room against the top salesperson, like they're going to sell me around the room. But that's not what I'm trying to do. That's not what I'm good at. I'm good at just getting to know you and be like, hey, look, I want you to like me. I want you to know me. I want you to trust me. And then from there, everything takes off.
Yeah. I think also, if you think about business over the cycle of 10 years instead of a year, or even some people even a quarter, I always find that once you get your business established, you have enough relationships, the pressure that you have on each one of those relationships become less, because you're not relying on every single deal from the people that you know. And I mean, people will literally apologize, be like, "I'm sorry, I had to send this deal to this other title company." I'm like, it's okay.
We had this conversation the other day, because I was like, I haven't had a deal with y'all since last August. Yeah. And we do a lot for me and everything. I'm just sometimes I'm not in the spot to refer. And now since then, we've had a few deals together, which is great, and I love it. But same way with me, it's my first year was heavily relying on friends and family. Second year, a little bit the same, but that year was just weird in general. But the last 2 years, it's kind of, that scales back a little bit, and you're starting to get more referrals from your past clients who you close deals with. They're like, "Oh, wait, I thought buying a house was hard. It was easy. Hey, you need to go talk to my friend Brett."
Yeah.
So past clients have been big. New realtors. Doing the deals with them. So like you said, once you build those relationships, kind of just, it's a snowball effect. Just slowly, and that's what I'm in this for, right? Not for the short term. 2-3 years. This is 10, 15, 20 years where build those relationships, and we're going to be good.
Yeah, and you'll see, you won't see somebody for 3 to 6 months, maybe 3 to 6 years, and then they just circle back around because they get an opportunity that you didn't expect. And when you reached out to me and told me that, or you mentioned me, I didn't know we had done a deal since last August. Which, I mean, my team might get frustrated with me because I'm making sure I'm supposed to be marketing, generating business. But at the end of the day,
but you don't always know.
Yeah, for sure.
You don't always know where the file originates from or things like that, but.
I know my numbers enough to know where I need to be on a weekly basis and a monthly basis and an annual basis. And if I'm hitting that, then the relationships that I've built over the 5-6 years are producing that for me. It's not that these relationships no longer are producing that for me. And now it's all of that kind of combined, and they all come back in circles and cycles. And you gotta be, once you create a foundation for your business and all the things that you do, right? All of those things are what allows you to get where you're at and how you can stand on that foundation and continue to grow. And if you start peeling away pieces of that and not doing some of the things you were doing at the beginning, then you lose the momentum and the solid ground you have on to continue to grow. And so, I've gone to BNI for 3 years in a row now, every Thursday in Hammond, every week. And people are like, I can't believe you still go. It's part of the foundation in which I run my business. There's no way I won't go. Same with all these networking groups and the realtor associations and all that. All those people, even though I might not be doing direct business with the people that are on the board, I guarantee you that other people are seeing me there and associating me with adding value. I saw you on a flyer the other day with Neighbor or WCR sponsoring an event, and I had nothing to do with it. I just showed up on my social media account, and I saw it, and I was at a Ladder and Bloom office the other day, and I saw the sign on the wall. Like, you really don't know how much and how far that stuff goes. So you've got to just be where all the people that you want to do business with are going to be, and trust you're doing the right thing and that your money's going to the right place. And then you have to prove yourself when you get the opportunity. You've got to be thorough. You got to go the extra mile. You got to search and find the answers in the places that you go search and find the answers. And if you do that, especially in this town, if you do the right thing and work hard and you're humble in this town, over time you're going to win. There's no doubt.
Absolutely. No one likes the loudest person in the room generally.
Yeah. Well, and that's when I think of you, one of the things I think of is someone who's very consistent, someone who's like a constant, right? And a huge part of that, you're going to get the people who I don't know. It's like a shooting star, right? They go up and then they fizzle out, right? But it's like one of those things where, so those things do happen. And I know we could all talk about this. Is like there's been people in the business who come in, they kind of make a lot of noise, and then they fizzle out. I mean, how many loan officers are no longer in the business? I mean, it's like a significant number right now.
Oh, dude, I heard it was like
significant number.
From hundreds of thousands to
I think maybe 60,000 or something.
That's crazy.
You want to hear what something crazier is? What? About 70% of those loan officers are above 40.
That are still in it or got out?
Or actually, no, that may be like 75, 80%. That are still in the business are over the age of 40.
70% are heading toward retirement.
So there's only about 7% of loan officers between 20 and 29, which I just graduated from that. But between 30 and 39, it's only about like 15% or so. Wow. But a majority of them are phasing out.
Right. They're getting into later ages of life. They're thinking about retirement. They're thinking maybe I want something that's a little
bit. And what I found in my dad's prime example, he had a big mortgage company back in the day, 2008, he does reverses now, but I pushed him, Dad, you need to go hustle a little bit more. And he's like, no, it just comes to me. He's like, a lot of those older loan officers, they're good. They don't want to go out there and do a lot of stuff. They just want it.
They've got established clients.
Yeah, they have established clients. They have established referral partners, which is great, but it leaves opportunity. There's going to be a lot of opportunity over the next 10 years.
Huge opportunity.
As all these people, people who are in their 50s, who are in the prime of their career, it's going to start slowing down soon.
Well, and it's also important if their only contact is, a mortgage broker or something like that who is getting of retirement age.
Sure.
I mean, my mother just retired earlier this year as a lender, and there's a level there that this is the huge part. So we're talking about the community involvement, like going to these events, especially the realtor events, right? So many people are just like, how do you have the time for that? First of all, we all make the time and we build it into our schedule, right? As the foundation. But a huge part of this is you can have a conversation with someone one time, and rarely does a conversation one time turn into business, right? Same thing with cold calling. If I cold call someone one time, rarely is that enough to get an immediate deal. Same thing if I sent them a letter, they saw one social media post, whatever. But the majority of time, it's that idea you have to have multiple touches with someone, right? I forgot what it used to be, but I remember when I sent direct mail, it was like you have to send them 7 pieces of mail before someone you converts to business or whatever.
Yeah.
But so stuff like that. But these meetings, so much of what that is, it's not that direct ROI, but it's, establishing relationships, but then staying top of mind.
Yeah. And to your point, it kind of goes back to what, I learned from Jared over the years is be intentional about it. when I first got in the business, I may have not been the most intentional or like in anything I did. Not saying I wasn't doing it humbly or anything, but I maybe been posting, okay, on social media, hey, I'm a lender, send me business, or like, going in and just calling as many realtors as I can, not forming that relationship and not being intentional. Over the years, I've, grown a little bit, realized, okay, it's about being intentional in everything you do, actually meaning what you say and what you're going to do. And, calling 40 realtors on a Monday morning, every other loan officer in the world's going to do that. But yeah, I mean, I'm not,
But how many of them are going to show up to the events? A lot of them are like, I ain't got time for that.
Few and far between right now.
Right, exactly. But so many people, they're like, it's almost like they're too good for that, right? And I'm like, do not understand, like when anyone can just swipe a credit card and do whatever, but it's the people who, when you have to put in time and you have to sow that effort, very few people are willing to do that. Like that's almost too expensive for them to give time and to give effort. And so the people who are constantly giving time and giving effort, it's a huge impression.
Yeah. And the funny thing is I can see a young lender that's coming up or a young real estate agent that's coming up or a young title person that's coming up because you start seeing them being present. And after, I guarantee to get somebody that I have in my head, he's going to be somewhere, someday soon because he's going to be everywhere. And you get discouraged when you first get in that mindset. If you're stepping out and you're going to start doing that kind of stuff.
Especially because not the immediate ROI,
it's
right?
Not.
But
I told him the other day, you have to give yourself 3 years before you're really there. And there's no, like you said it just now. Yeah. You said first year family, second year is a little more family, third year, now you're starting to get people will refer you work. It's going to take 3 years. You got to be able to put that type of education.
Yeah, it's 3 years and it's adjustments.
Yeah.
You have to pivot and swerve in this market. I mean, I'm sure you know this. I'm sure you know this from how much the market's changed over the last 3 years, especially like I got in August 1st of 2021.
Very interesting time to get in the business.
Well, interest rates were still low.
Baptism by fire.
Hurricane Ida hits on the 29th.
Yep.
Southeast Louisiana is out of business for 60 days. No one has power. No one's working. Everything's just kind of coming back to normal slowly. Well, rates are starting to creep up at that point in time, right? Don't close my first loan until, December 30th that year, right? Then rates start going up, start closing some loans, kind of finished out having a good year for my first year, right? Year two, rates still continue to skyrocket and, things change. Rates get up to 8%. Okay, well, now I have to really pivot how I'm going to do stuff. So sort of reinvesting back into myself, reading more, talking to more people, getting out there more. 2024, tracking and, reviewing my metrics, having a basis foundations of being consistent and, having somebody to hold me accountable, which helped me grow, pretty significantly in 2024, taking the same things 2025, and it's been fruitful. It's been better,
You know what this reminds me of? Have you guys heard of Atomic Habits by James Clear? Mm-hmm. So I love his book, but more than that, I love his newsletter, his email newsletter. It's like
comes out like every Thursday, I think.
Yeah, it's fantastic.
I need that log into it.
Yeah, well, it's one of those things. Sometimes I'm like, I go and I review them just because I hate my email inbox. But anyway, apart from that, one of the things he said one time that really stuck with me, he said, everyone wants to do the intensity thing, that really exciting thing, but what most people won't do is the consistency thing, right? Mm-hmm. And so most of us, it's not that we need to bench 500 pounds, it's that we need to squat frequently or, bench press frequently. And it doesn't have to be that heavy weight. Mm-hmm. Everyone wants that real big, exciting thing, right? Mm-hmm. Like maybe someone doesn't need to run a marathon, but what if they ran 3 times a week? Like even if, whatever that looks like, but most people only think towards, and as what we're talking about here is, it's really the idea that when you know the basics and you consistently do them, that is what this market is forcing people to do. Go back to the basics.
Yeah. I was talking to a real estate agent today, and they were saying that, they are literally going back to day one real estate. And she said that, getting more listings, pre-approved buyers in 3 weeks since she's been doing it. It's true. You have to do it in this market.
So anyone struggling in this market right now, I mean, like that's a huge thing. Like just go back to the basics. And so what would be the basics that you think? So I say we should say for each one. Okay. So what do you think the basics are for people who are, lenders?
Yeah. I mean, kind of a lot of the stuff I've been talking about. Be intentional, form relationships, be consistent, make sure you're tracking your numbers. Like that's what's changed my business.
And it's tracking numbers like pre-approvals, tracking like
all
pre-qualified.
all the above. Like I know from the amount of leads I get. Okay, well, let me back up to that. So I have a sheet. It's called a greatness tracker. I think the name's very cheesy, but I got it from it's a lending coaching group. I got a copy of it some way, somehow. But it's basically like square boxes of, who you talk to every week. So I fill that every week. I fill out how many leads I have on it. I fill out how many thank you notes I write on it, how many meetings and stuff. Okay. I take all my meetings a week, score it, how many people I talk to, score it. And I put it all in my tracker at the end of the month. So, okay, I got 20 leads this month, 7 applications, 3 pre-approvals, 3 closings, right? So I'm breaking down the metrics. I know in 2024, my lead to conversion was 10%. So 10%, I had 10% chance every time I got a lead that deal was going to close. So you can you can reverse engineer the numbers. Okay, well, I know from those leads, I had a 33% chance of doing them application. From the application, I had like a 65% chance of pre-approving them. Pre-approval, about 70% chance they would go under contract and do a deal with me. From that deal, they had about an 85% chance of closing the deal. So knowing all those numbers, and my goals this year have been to increase those lead conversions. Right, those have gone up this year by about.
That comes with skill.
Yeah, exactly. Investing in yourself and everything.
It's funny that you say you have the boxes. So my basics are on a whiteboard, and I got someone who knows how to make those stickers, right? That can go on a whiteboard. I don't know, Cricut or whatever. And it wasn't me. I paid someone to do it. But mine are literally talk to motivated sellers, and this box can be people I'm following up with, I'm talking to the first time, whatever. Then I've got walk properties, and then I've got underwrite the numbers, make offers, and then I've got like a progression board of, under contract, closed, I need properties that need to get rented out, need to be sold, whatever. And then underneath it though, I have meetings and marketing. And basically, as long as that board is consistently has, movement in it, it's when that board gets neglected. Like, I haven't talked to.
It drops off when you stop doing it.
That's when business, but those are the basics, right?
Yep.
When people tell me all the time, they're like, oh, I want to buy an investment. I'm like, when's the last time you've run numbers on an investment property? When's the last time you made an offer? I'm like, you're not going to automatically just like by osmosis buy a property without making offers, right?
Yeah.
It goes back to those basics.
Two things on this. I'll let Jared go. Going back, yes, tracking it. I have one of those Remarkables, and I have a blank PDF sheet, and I save everything I do each week. So I can go back, hey, why isn't my production where it needs to be? Okay, well, let me look back 3 weeks. Okay, am I filling out these sheets properly?
Because that fills the pipeline.
Exactly. It says all those little things. But one of the biggest things that helped me this year was I sat down with Lauren Navarre at the end of last year talking about ideal clients. You and Lauren talking about ideal clients and actually identifying who your ideal client is a game changer. Mm-hmm. I named mine Peter Dinklage. Not because he's a trust fund baby, Game of Thrones, but dual income, no kids.
Okay, I did not catch that reference. You can tell I'm not good with pop culture. Keep going. What is it? Dual income?
Dual income, no kids.
Okay, there you go. Yep.
Me and my wife, dual income, no kids. So that's my ideal client.
We call ourselves dinkwads.
Yeah,
dual income with dogs.
with dogs, exactly. So, that's who I've targeted my marketing for because, they're looking to buy that first time house in the same range we're looking at.
Young professionals.
Like they're going to have, 5 to 10% saved up. They're going to have good credit, good income. Like they're going to be able to buy the houses that I'm looking for, right? So once I started defining my ideal client, my metrics changed. They got better. My loan size this year is like almost $80,000 higher than it was last year.
Yeah.
Have you joined any young professional networks?
I haven't.
So offline, we'll talk about that.
Yeah.
Because hearing that that's your ideal client, and we talk about being involved in groups and things like that, that might be an opportunity.
Absolutely.
But I'm glad you said it. I was waiting for my turn because I was going to say, there's no doubt in my mind that part of the foundation in which you have to establish your marketing budget or your marketing plan is your ideal client. Like you have to know who you're speaking to and why. And even the most important thing, or maybe one of the most important things, is where that person is and where they spend their time. Like Courtney said, the young professional groups is where your ideal client's going to spend their time.
Look, I living in New Orleans, one of my favorite things is Wednesdays at the Square. Do you guys know what that is?
Mm-hmm. Yeah, it's fun.
We love it. Well, that's run by a young professionals network, right? And most people just know Wednesdays at Square, but they don't know who puts it on. But like
YLC,
yeah,
I think.
yeah. And so, but it's the same concept, but they've got those in different areas, and that was literally my first thought. I mean, but also those people are like in the CBD, young professionals, things like that. They generally will live in that area too.
Yeah, and the young professionals at the person you're talking about now went from between 20 and 28, 30, 40 years ago to like 20 and 45. I mean 35 now. Like there's a larger group of people that are
the average first time home buyer right now is like
in
38.
Yeah. Yep, it's in
like
their
38.
early.
Yeah.
Dual income, no kids can extend way beyond what it used to be. So I mean, there's
Right.
a gigantic group of people that could do that. And for us, when we're trying to help people figure out what they're gonna do for marketing, or where they're gonna market, or whether they're gonna invest in something, it's like, well, who's your ideal client? And I'm talking like defining that person down to the name, like you said, knowing like what they do for fun, what their hobbies are, how many children they have, what their demographics are, what they do for a living, where they get their groceries, where their kids go to school, where they go to church, all of that type of stuff. You build that whole profile. So when somebody walks in the door, you're like, that's the person I want to be.
Right.
Or somebody says, hey, I need you to spend this money. Well, that's where my ideal client's going to be. But the biggest switch that went off in my brain was whenever I was able to say, what are my ideal clients' goals? Like, what do they want? And what are the things that are between them where they want to be? And people say, well, I don't know what to say when I stand up and talk in front of a room. If you know who your ideal clients, what their goals are, all you talk about is, I know this is where you're trying to get. These are the things that you are going to be in the way of it. Now let me talk about how I can solve those problems for you.
Yeah.
If you say that and the person is your ideal client in the room, they're going to say, hold on, that person knows what I want. And they have a solution for the things that I'm struggling with every day. Why would they not want to talk to you? And so I think you nailed it on the head whenever you said ideal client.
And I'll say this, I heard y'all talk about that before I sat down with Lauren. It's a little overwhelming to think about.
Yeah.
It is. It's like, okay, when you think about it, well, ideal clients, anyone who's looking to buy a house.
And I'm going to argue that real estate people, we do get a mental block with this because we're like, we want to work with everyone.
Right.
Right?
Mm-hmm. Which you do. You want to help as many people as you can, right? You just want to focus your efforts on getting the clients that, are your ideal clients, and, focus on marketing those, because those are going to end up being good referral sources down the line too.
You want to put 80% of your effort toward the 20% clientele that converts to business, right?
But I'll dispel one other myth too, because I hear people sometimes saying, "Well, what if I go to this other group of people that are not my ideal client? What do I do?" Well, if you go sit in a room with the graduating, if you're sponsoring a graduation event for a high school, and you talk about how you serve your ideal client, chances are the people in that room are going to have kids that might have just graduated college too. And their ideal client, their other kid might be your ideal client, and they refer you to the other person. You'll find that you'll have people advocating out in the community, be like, "Oh, I know this other person who's in the same shoes. I'd really like to hang out with you. Let me hang out with them." And then you start surrounding yourself with other people within that same circle that are also servicing those people, and you start spending time with them, like we do in BNI. And then those people will talk about you whenever they're solving the other problems that person's running into. And it just turns into a network and a group. But again, you have to create the foundation of your ideal client.
Right, exactly. It's a foundation, and you're going to do all the other deals. Like one of the funnest deals I ever did was a cash out refinance for a deal that y'all closed for a $17 million, SBA commercial property deal purchase, right? I wouldn't say that guy was my ideal client, but it was a hell of a fun deal.
Yeah, for
sure.
It was awesome, and like I'm close with them. I picked his brain on like business and other things before in the past. A great guy.
So not close the whole thing out, but close our loop here. Basics of a real estate title company.
Yeah, I mean, that was what it. You got to know who your ideal client is and the foundation of it. But also, once you get to that point, right? Kind of really, like you said, circle all the way back. The groups that we're affiliated with and we're associated with, and our mindset towards those things, it's a foundational part of your business. And once you've identified your ideal client and where you're going to invest your money, no matter how busy you get, how successful you are, you have to keep that foundation in place. Be patient with it, consistent. Like Courtney was saying that you've been. It's patience, consistency, and intentionality, I think, are the foundation.
That's how you build allies.
It's 100% true.
Yeah, and the quicker you learn to do all three,
dude,
you'll take off quicker.
And it's funny you said the quicker you learn to do all three, the quicker you wrap your brain around the fact that all three are necessary. Because you can't do patience and consistency quickly. I mean, it is. Patience and consistency take forever. You can quickly figure out who your ideal client is, which I think everybody should do. But once you've done that, you have to commit yourself to years of commitment in order to get there to where you feel like everybody else is like, man, I feel like you're everywhere. Or you didn't see me the first 6-7 years of my hustling.
So this is a huge part. So in the real estate investing world, one of the best analogies I've heard anyone said, they said, you've got to think of this as you are planting an orchard. Mm-hmm. Because you can't do that. That requires consistency and patience, but and that's overnight, you're not going to start getting your apples or whatever, right? But, people want the fruit that comes from the seeds that you're planting, right? The benefits of investing in real estate, but you don't get rich quick. Mm-hmm. You get rich surely, but it's a bit slow, right? But it's one of those things where most people, if they don't have that right mindset that this is going to take some time, but I can't just check out while the time is clicking, passing by, I've got to actually be intentional, as the word you keep using, and showing up and doing these things that are the basics, right? That's how eventually I know that I'm basically properly tending to this, the seeds I've sown, and that they will reap the harvest that I'm hoping for. But too many people, You
see that with Airbnbs and short-term rentals across the country. People are getting crushed on them right now.
Well, you get people who they're speculators, right? We saw that. Tons of flippers are losing their butt right now. Airbnb, multifamily syndicators, different types of folks who just, let me skip a lot of the work and the time part, and let me just get this big windfall or whatever. And they miss a lot of the basics, right? They didn't underwrite the deal with proper due diligence and sound investing. They just kind of this market's only going up in 2020 and 2021. No one can lose. Everyone's a winner. And then they forgot that, markets do change, right?
Shift.
So,
markets are cyclical.
And very fast.
Yeah.
But then coming back down to it, though, so a lot of people have gotten out of this business, right? In all of our industries and even real estate agents, other folks as well. A lot of people have gotten out. But the folks who are staying in, pitting their head down and doing the consistent work, those are going to be the people that win. It has not been an easy year. 2025 has been a difficult year. The economy's shaky. It's a weird time. Interest rates are all over the place. Consumer sentiment's all over the place, right? But the folks who are going to win, it's he who has the most allies wins, right? Those strong, intentional relationships. But it's also, and then also he who has the most skill sets, right? The ones who are learning and improving and, all of those things. And so, and I know that is something that all three of us in this room, we get it because of how frequently we're seeing each other, right? It's kind of one of those things where you can tell when someone, for example, I know I need to be at these meetings, but then they never show up. It's okay, you don't really know that you need to, because otherwise you'd be doing it. You'd be here, right? So any final message for anyone who's kind of been on the fence around being involved in these community meetings, whether it's the board, the different boards, the associations, things like that. Any final word of advice to maybe say in a vendor or someone, whether it's another mortgage provider, insurance person, whoever.
Yeah, I would say just do it. Why not?
Yep.
The investment's going to be relatively low. You'll form relationships, you'll be around people, and that'll probably go a lot further than you not going.
Yeah, 100% agree.
Yeah.
100%. All right, speaking of the reason why we do this, I got to go do a closing. But that was great. I'm glad we got into the last topic. That was
Will you
really
close out and
stuff.
say, glad to have you? We should close it out.
Of course, I'm glad to have Brett.
Yeah.
It was great to have you on again, dude. I mean, seriously, it's been fun over the last couple of years knowing you. And this won't be the last time we do a podcast episode together.
No, that was fun.